Today I'm going to teach you a awesome Bollinger Bands and RSI trading strategy. We will discuss how to enter on an uptrend, downtrend and a sideways market, while also giving tips how to manage your trade properly to maximize your profit gain. First, I'm going to show you how to buy with this awesome trading strategy. So the indicators we will need is a Bollinger Band indicator. I'm using TradingView charts, so if you want to follow along, you can do so as well. Type in Bollinger Bands. Click over here, it's going to open the default Bollinger Band settings. So if we just go quickly to the settings menu, as you can see, length of 20, source close, the dev number 2 and offset 0. These are the Bollinger Band settings. So make sure to have these set in case yours is different. I'll also quickly change the colors: blue for buying, white for selling, red line in the middle. We also will need an RSI indicator, so relative strength index. We want this one. And don't change any of the settings as well. Keep as default. Default is, in this case, length of 14, source close, same as chart. Style, obviously I'm not going to change that. 70-30, upper band, lower band. There we go. Okay, now that we have all the indicators set up, this is the fun part. Let's learn the strategy, and the best way to learn it is me showing you guys how to buy in the market, sell, or in the sideways market as well. So let's start with a buying scenario. So let's say the market is currently trending towards the upside, right? We can see this nice little uptrend. If we just zoom out, as you can see, it's been trending towards the upside on the 4-hourly time frame for at least a month when we're looking at this chart. So huge trend towards the upside that's been identified. So we really want to be aiming for a buying trade rather than a selling one, because the overall trend currently is towards the buy side. So now what we are looking for is essentially the Bollinger Bands to kind of bounce off the lower white line, because we want to buy. Essentially we are looking for a oversold scenario, which the Bollinger Bands will show and the RSI will show. So we need both of these bands, this white one over here and the RSI, to be around this area zone. So we need to wait and see. So let's just play the replay tool and see what happens. It shoots towards the upside, downside, and as you can see, this push towards the downside is the ideal scenario. Why? Well, if we have a look over here, it's trending towards the upside nicely, had a pullback, right? RSI is oversold, Bollinger Bands is oversold. We want to buy this trade. Now, this is where a lot of people fail. They will probably enter over here, right? They would probably enter in this area zone and they would say, okay, it's oversold, let's just buy it straight away. But you need the confirmation. You cannot do that. Although in this case, you probably would have made, as you can see, 80 to 100 pips profit, which would have been nice. The win rate scenario is actually not good enough if you would use this strategy long term. So what you need is to wait for some sort of confirmation. So if we just play the replay tool once again, this is a bullish engulfing candlestick. This is where you essentially want to enter your trade, because you never know when the trend will change. This trade scenario, as you can see, although we had this nice area of support, it could have easily been broken, and if you entered somewhere around here and it broke out, you would have been stopped out and you lost money, right? So you need the double confirmation. So this was a nice push towards the upside, confirms that this support area is still very much valid, and we had a nice pullback, bullish engulfing candlestick. This is where we would want to enter our trade towards the upside. And if we just have a look, what will happen is straight away it goes towards the upside, and you could have definitely maximized your pip gain this way. This is the better way to trade, with double confirmations. You cannot just simply enter the trade because he has a support, or just because RSI is oversold, or just because the Bollinger Bands is oversold, does not mean it will just simply bounce back. You need some sort of confirmation, and the only time you can confirm is when the move already happens. So this move over here was a nice move, confirming that this support is still very much valid, right? We had the RSI, it was valid. Bollinger Band, valid, right? So everything is still working. The buying pressure is still around this area zone. So after it pulled back once again, which is nice, Bullish engulfing candle as confirmation means that buying power is increasing, selling power is decreasing. We are shooting towards the upside to profit the maximum pip gain we can. Now let's have a look at the scenario towards the downside. Simple thing, as you can see, shooting towards the downside very nicely. So overall trend currently for a month at least, it has been trending down. We are definitely aiming to sell the trade rather than buy because we don't want to trade against the trend. It's the simple rule in Forex, right? A lot of people get confused with this. I don't know why. Maybe because beginners overcomplicate things. That's what usually happens. So as you can see, trending towards the downside, we did get a little push exhaustion scenario. The RSI is not yet overbought. We want basically the RSI to be around here, and we also want the Bollinger Bands to be bouncing off the blue line in this case, because now we want to trade the opposite direction, so towards the downside. We need to play the tool now, and as you can see, it's shooting towards the downside. We don't want to enter anywhere here. It's trending down. It's too late to enter. We need to wait for a proper entry. So a pullback, right? So we are waiting for a pullback. And boom, a nice pullback towards the downside. Look, a bearish engulfing candle trying to break the blue line, which is the blue Bollinger Band line, which means it's overbought. This is pretty much overbought, although it's not outside the RSI bands, which is the ideal scenario. I would take this trade probably 90% of the time, since it's still trending towards the downside, right? Overall trend is towards the downside. RSI was nearly overbought. A nice bearish engulfing candlestick confirmation to shoot towards the downside. We would enter this trade short, and there we go. This is the confirmation, bearish engulfing candlestick. In this case, you didn't need to wait for a push exhaustion push scenario, right? It straight away happened. It pushed, and nice exhaustion because of the bearish engulfing candle. We are going down short, and if we just see this trade, as you can see, it starts to shoot towards the downside, and you can maximize your pip gain. How do you do it? You can put your stop loss to entry to be risk-free, or carry on moving your stop loss towards the middle of the band. So let's say until it crosses the band, you don't close the trade. So let's say we could be here. As you can see, the red band is over here. You're still making money. You carry on making money, and boom, it crossed, right? This is where you would have closed your trade. So imagine we entered somewhere around here because of this bearish engulfing candle. We would close the trade out somewhere around here. So 100 pips profit. Easy as that, and a very simple way to manage your risk at the same time maximize your profit gain. Now in a consolidating market, it usually is a little bit different, and let me explain why. So let's mark an area of sensitivity, right? So resistance and support are already here, currently in a nice consolidation, kind of moving between these two lines. So we need to wait for a break. The overall trend, as you can see, has been consolidating, although it is trending towards the downside. It did break towards the downside, so we are expecting it a little bit that it's probably gonna go down. However, anything could happen when it consolidates. It could go up, go down every single time before it breaks one of the resistance or support zones. But what you essentially want is to enter your trades on different RSI levels and the Bollinger levels. So let me explain. If we trade with this tool, as you can see, goes towards the downside. The break happens with a bearish engulfing candlestick. Now, it bounced off in between these two lines for a while, right? So the red line has now been broken. Bearish engulfing candlestick, right? After that, we see the RSI has been oversold. This indicates that very likely the market will move towards the upside. So I explained this many times in my videos before. Push, exhaustion, push scenario. This is what's currently happening. As you can see, a push happened. The push means it's a break in an area of support. The area of support was over here. It broke out with a bearish engulfing candlestick. This tells us, the RSI indicator tells us is oversold, right? So we had an exhaustion. The exhaustion happens in a previous area of sensitivity. Support becomes resistance. So this support line over here now became a new resistance or a new ceiling for the candlesticks. What happens now? It goes towards the downside very nicely. We would enter our trade somewhere around this area zone of a bounce, and it would be a nice trade towards the downside. However, we wouldn't get a bearish engulfing candle. This is not the ideal scenario. If we have a look at the 1 hourly time frame, we can see the same scenario over here. So what I would do personally, if I saw this nice break, bearish engulfing candle, look, the pullback happened over here. The RSI indicator is in the middle. You know it's a pullback. So in the middle, usually what it means, it has space for movement again. So push, exhaustion, push scenario. Same thing over here, push, exhaustion, push. Bearish engulfing candles as confirmation. As you can see, 1, 2 bearish engulfing candles. We can end the trade short the position, let's say somewhere over here, and we are going down nicely towards the downside. And we would follow not this red line over here with the 1 hourly time frame. We would follow the 4 hourly time frame over here, and as you can see, it would have been a nice trade towards the downside, because the entry would be on the 1 hourly time frame in this case, because we want to search or find the confirmation to enter the trade. We need some sort of confirmation. If we cannot get a bearish engulfing candle in this scenario, the trade would likely turn around or suck. This is my experience. I'm telling you guys how it is, and most of the time that's how it is. And as you can see, shoots towards the downside. The red line has not been crossed, so we would never close our trade. We would, move our stop loss to entry, or carry on moving our stop loss near the red line and carry on making money. And as you can see, we would make a ton of money. It would have went down towards the downside, and once we see something like this, a nice cross, we would close the trade off. So let's just say we would enter somewhere around here, close off around this area, 85 pip, nice take profit. Or maybe you would be satisfied with the profits over here, 130 pips, and you would have closed off earlier. But generally, I sacrifice sometimes a few pips here and there, because you don't know how long the trend will last. The trend could last, 200 pips to 600 pips to 1000 pips. So closing early doesn't always work out the best way you want it to. And yeah, if you want to join my trading group, you're more than welcome to. Is the first link down in the description below, forextradingalliance.com. And if you enjoyed this video, smash that like button. And for now, take care guys, have a wonderful day, stay safe, and goodbye.